Welcome back, everyone. Next up, we have DSS Inc. It trades on the New York Stock Exchange American under the symbol DSS and is a multinational company operating businesses within 9 divisions: product packaging, biotechnology, direct marketing, commercial lending, securities and investment management, alternative trading, digital transformation, secure living, and alternative energy. DSS strategically acquires and develops assets to enrich the value of its shareholders through calculated IPO spinoffs and a parametric share distribution strategy. Please welcome its COO, Jason Grady, and CFO, Todd Macko. Welcome, gentlemen. Exciting business you have here.
Yeah, thank you, Anna. Thanks. Sorry it's such a mouthful, but yeah, we've got a lot going on.
You're doing a lot. All right. The floor is yours, and call me back when you're ready for questions.
Thank you. Thank you. And thanks for everyone for participating and your interest in DSS. So as I scroll through these slides, we have our forward-looking statements. I have to make mention of that. But really what I want to get to is who DSS is. And Anna just did it very well of the introduction of who we are. DSS is a portfolio company traded on the New York Stock Exchange, NYSE. And we have a plethora of different business lines, 9 business lines in total, operating almost 40 subsidiaries in various areas. The commonality to these business lines are that they are contemporary in nature. They have very high ceilings, almost unlimited market potential, and oftentimes provide recurring revenue streams. Those are why we've navigated and we're guided into those business lines. But what I really want to talk about for those of you who know DSS is that what are the near-term initiatives? A lot of what DSS has in the background is incubating assets that we have acquired, incubating businesses, optimizing businesses to position them for success. But a lot of the near-term initiatives are really where the exciting part and what I think is will be most near and dear to current shareholders and potential shareholders. And something that I really want to illustrate is obviously our market cap is less than what we believe is fair market value, and certainly less than what projected future portfolio values will be as we exit out of those portfolios into public offerings. Our mantra to the street has been just that, is that we acquire assets, we develop and optimize those assets, and then we IPO or offer those assets in some sort of public offering. If you look at some of our highlights on the financial side, year-over-year revenue increases from 133%, from $20 million up to $47 million, right? Again, as I just discussed, our business plan includes monetization of the subsidiaries through periodic spinoffs, and then potential dividends to shareholders. We bring value to our shareholders in 2 ways. One, either through those dividends themselves of the individual entities that we spin off, or 2, by adding liquidity and assets to the balance sheet and bolstering our balance sheet. So it's really a 2-pronged approach where DSS has the opportunity to provide value. The first spinoff that we're anticipating is our Impact Biomedical. I know that people have been hearing about Impact Biomedical for some time. We believe the market is now right and prime for that. We are clearing the hurdles that we've had from a regulatory standpoint with the SEC. And we should be looking in the very near future here to see some more news on where Impact Bio stands, the issuance of the dividend that we've promised to our shareholders, and the eventual IPO coming up in the second quarter of 23. Strong organic growth, right? Some of our subsidiaries are growing in the businesses that we've invested in and have nurtured. Premier Packaging, as an example, grown tremendously over the last several years, 20% increase in revenue and profitability. AMRE, American Pacific Bancorp, all businesses that are growing and are certainly highlights from a balance sheet and profit and loss statement. We're increasing our equity ownership in our subsidiaries going forward, right? We're investing in subsidiaries that we may only own a portion of. We're increasing assets. We're bringing in more assets so that the parts certainly bolster the entire entity. And at the end of the day, we believe the stock is trading at 58% discount to net asset value, right, of its subsidiaries. So that's certainly a ripe time for people to get into DSS where the company sits currently. Again, some of the highlights of DSS: our share price is currently around 23 cents, market cap of $30 million, 130 million shares out, 39 million shares outstanding. Our public float is about 57 million shares. The other highlight here is that we have insider ownership of about 58%. So here are some of the planned offerings of 2023. And as I built this presentation deck, right, and everybody needs to take this into consideration, this is a timestamp. You know, things change daily in this marketplace. And there are things that are happening, market factors that are obviously beyond our control, that are making us pivot and shift every day. And we are managing these businesses daily on timing and when we believe they are ready to be birthed, ready to be IPO'd, ready to take to the public. The one that obviously is everybody's against talking about is Impact Biomedical, right? And what does that company do? So it's a biotechnology company that develops assets, brings in assets to help further drugs and its own specific compounds, and all derived from natural ingredients. AMRE, which is our REIT business, right? So we go out and we've been able to acquire 5 healthcare facilities that are critical acute healthcare businesses, surgical hospitals, physician groups, and we are operating those businesses in a triple net lease format. The third one is is American Pacific Bancorp, right, which is a commercial lending. But the niche there is that we are into things like business lines of credit, land development, financing, inventory financing, third-party loan servicing, in specific businesses like direct sales, manufacturing, in other vertical markets. Here's a slide that I want everybody to see about our asset growth. Revenue is up 133% since 2019. Total assets, $248 million. You can see the chart here, how we've continued to grow assets. We've come a long ways. I hate to talk about what we did yesterday. I'd like to talk about what we're going to do in the future. But this gives you a good example of where we've been. Again, our revenue up 133% 2022. You can see that this is an extreme improvement over where the company has been historically. Back to my original statement of market cap being less than fair market value, and then certainly projected future portfolio values. We believe, and I don't need to read all these on the slide here, but we believe that the stock is trading at 58% discount to net asset value per share right now. We believe there's significant upside from a 21-cent stock price where we are currently today. We talk about the diverse business lines that we're in. And DSS has roughly 9 or so business lines that we've pared back to really focus on about 6 of those. And those 6 are what I want to talk about today. The others are really in an incubation stage. But these 6, product packaging, banking and financing, biotechnology, direct marketing, securities, and an alternative trading. These are the areas that we think are the most near term and have the most potential for DSS current and future shareholders. Let's talk about a little bit about each of those businesses. So each of those businesses inside those lines, those verticals I just described, are Impact Biomedical is the name of the company, which is the expected spinoff in the very near term here. Premier Packaging Corporation, Sharing Services Group. Sharing Services, I hope, and if anybody hasn't seen it yet, there was a press release that went out this morning stating that we are issuing a dividend of 2 shares of Sharing Services Global Corporation for every 1 share that you hold of DSS. The record date is April 28th. The shares will be issued shortly thereafter of Sharing Services Global. But this is really the demonstration of the first time we've been able to issue a dividend in DSS's history. I think this is something that we've worked hard to do and something that really shows our commitment to our business plan that we've been stating for a period of time now. DSS Pure Air, air purification business. We have some world-class assets there that we believe has big monetization potential. The next spinoff we believe is going to be AMRE. I say spinoff, I use that term loosely, public offering, opportunity for our shareholders or potential new shareholders to participate in some type of public offering at our REIT business. American Pacific Bancorp is right behind that. I believe there's an opportunity for the Bancorp to have a public offering as well. But as you can imagine, both AMRE and American Pacific Bank are tempered in different ways by what the current market conditions are. So that does not change our macro plan of having these spinned off. It's just a matter of timing when we believe the market is right. We hate to go out in an offering early or before we maximize the potential of each of those businesses. USX Holding Company is our alternative trading securities trading platform. And then DSS Securities, which is made up of mutual fund management and various broker dealers. These businesses drive cash flow, they will drive profitability and give us multiple horses in the race and help diversify our revenue and income streams. Companies by revenue stage. This gives you an idea of the size of these businesses. So DSS Securities, AMRE, gives you an idea somewhere between $100,000 and $1 million in revenue. Premier Packaging, closer to $20 million revenue in company, and then Sharing Services in excess of $20 million. Just to give you an idea of scope and size of the businesses. Let's talk about a little bit about what these businesses are in more detail. Again, Impact Biomedical, right? So we're engaged in advancing biopharmaceuticals, right? With products and compounds, about 12 or so in our portfolio that help with the treatment of oncology, neurology, immunology. We have some customer-centric, customer-facing products. But the beauty of all of our products is that these compounds are derived from naturally occurring compounds, things that occur in nature that we are either modifying or adding to other compounds to enhance or improve their efficacy greatly. Again, the consumer products that we have are alternative sugars and fragrances and insect repellents, as well as antibacterials, antivirals, and antimicrobials. We believe there's a lot of potential with the product portfolio that we have at Impact Bio, and we are continuing to look for new and different and more compounds that we can add to this portfolio. AMRE. AMRE is a REIT, right? So we acquire state-of-the-art medical facilities, and then we issue those under triple net leases, and then provide dividends in a sale leaseback model. We target hospitals, physician groups, ambulatory surgical centers, as I mentioned previously. But we are looking for a AAA property in a growing contemporary marketplace. That's the niche that we've carved out in the type of asset that we are looking to acquire, of which we have a pipeline that we believe is very healthy and providing a lot of potential in the future. Premier Packaging, custom folding cartons, consumer packaging. This business has grown tremendously, double-digit growth the last few years. It's a paperboard packaging, consumer packaging businesses, so retail, environment, stuff you see on the shelves of your grocery stores, your pharmacies, your food and beverage centers. Premier builds custom packaging for those type of products. We manufacture hundreds of millions of boxes every year for some of the world's largest brands. American Pacific Bancorp. So just what it says, a commercial lender that really specializes in some maybe not a little non-traditional banking, right? But we go out and we look to acquire equity positions in undervalued commercial banks to help bring those in, to help grow to help grow American Pacific Bancorp. We have a strong network of investment opportunities. American Pacific Bank has about $40 million in loans outstanding now that are providing somewhere between an 8 and 11% return. Very straightforward, but very traditional bank that is very successful. High quality loans with almost no credit issues. Sharing Services Global Corporation, right? Sharing Services, again, of which everyone who is a DSS shareholder or will be a DSS shareholder on April 28th will receive 2 shares of Sharing Services Global, which is an OTC company today with a potential uplisting to NASDAQ in the future. SHRG is a platform that leverages various capabilities, whether it's logistics or management or products to consumers through a direct sales model. Not only does it sell products itself, but it helps other companies in this space optimize their business from a corporate governance and business continuity standpoint. It's really a platform to help businesses in this market springboard to success. DSS Pure Air, right? So DSS Pure Air is both a business to business and business to consumer air purification company. We hold some assets, world-class assets, in my opinion, for air purification and filtration that we are taking to market. We believe that there is a tremendous need on the global macro stage for clean air for people's lives, healthy living, obviously everything that's going on with the pandemic and future pandemics. DSS Pure Air will bring solutions to its customers to help mitigate those future issues. A little bit about the leadership team. Our chairman, Mr. Hangfei Ambrose Chan, our CEO, Frank Huzel, our executive director and our president of international operations, Mo Chan, myself as a chief operating officer, and Todd Macko, who is on this call with me as well as our chief financial officer. Anna, that wraps it up. I'm ready to have a conversation and have some questions.
Great. Good job. Okay. So we have a question. Is there any more information you can tell us about today's press release, right? There was a stock dividend of Sharing Services being issued to DSS shareholders.
Yeah, so it's just that. So if you're a DSS shareholder of record on April 28th, you're going to receive 2 shares of Sharing Services Global Corporation, which is traded on the OTC, for simply your ownership of that DSS share. Those shares will be issued on or about May 4th, if I had to guess, a few days after the record date.
Okay. Thank you for that. Talk about how confident you are that you can complete these 3 spinoffs in the next 12 months.
You know, Anna, I'm not necessarily confident that I can get it done in the next 12 months. I can tell you that, you know, as we just demonstrated, we're working towards that macro goal. And we just demonstrated through this dividend of SHRG and the potential uplist of SHRG, which I'm confident will happen. I'm confident in that uplist. I'm confident in the IPO of Impact Biomedical. But as I talked about previously, AMRE, our REIT business, which is in the niche medical space, which is being hammered by macroeconomic factors, Medicare reimbursements, cost of nursing labor, just as a couple of examples. The timing may not be right over the next 6 to 10 months between now and the end of the year. So to say it's going to happen in 23 or the next 12 months may be a little premature. That said, it does not change our macro goal of that we are going to offer these companies when the timing is right. It's just that, you know, whether it's in the next 6 or 12 months, it's hard to foresee, again, pending various macroeconomic factors. You know, but like I said previously as well, that these offerings, whether a dividend is provided or not, provide DSS shareholders value in 2 ways. The potential dividend we just discussed, and as we're demonstrating with SHRG, right? That when that company goes public, and or the liquidity that it provides to DSS proper and the enhancement of the balance sheet by increasing its assets.
Well, transparency matters. Thank you for that. Let's talk about the recent litigation loss and the judgment payout. When does DSS expect to do another capital raise? And what's your monthly burn?
Okay, so let me answer that in a little bit different order. I guess, so the litigation loss itself was financed internally through our investment bank, right? So there was no need to go raise capital for that. It's a 2-year note. I'm not concerned about repayment of that in the short term, so I think we're good there. Our monthly burn rate currently is probably close to $500,000. That said, we are working very hard to get that down. Now, DSS is invests in company, as I described in its business plan. So there's always capital going to be required. But we are trying to cut any burn down to less than $250K a month. So that said, I'm not expecting another capital raise in the near term or even this year for that matter.
Okay, good to know. And how does DSS decide on how long it will invest in a subsidiary booking losses?
So, again, it's back to the, each of these business sectors is different, right? And it's primarily based on the timing of the economy in that particular vertical market. There's some shifts and there's some subjectivity to it, right? To our commitment and timetable, and how close, things like how close is the business to positive cash flow, the significance of its revenue. How close are we to positive EBITDA, right? But then ultimately, do we believe as a management team it's ready to be birthed? And I said this already, to be taken public, right? We don't want to do this too soon. We don't want to wait too long. We're trying to hit the bullseye of when this business is ripe to be able to extrapolate the value we think is there.
Well, so it looks like DSS is trading at a very attractive discount to net assets. So why does management think that is the case?
We believe that the value the story is broad, as you described in your intro. There was a lot of moving pieces. I think it's hard. It's been hard historically for us to be able to tell this story effectively. That's why we're out doing these type of things now, being more active in the marketplace, getting people to understand the story, why we're focusing on what's short term and less of what's in the incubation phase. So that's why I believe that we're trading at such a discount, because once people hear this story and they hear how we've positioned it in the thing, and we're actually now acting on the things that we've been saying that we're doing for some period of time, that's what's ultimately going to drive the stock price.
And has DSS any idea from investment bankers on what the market valuation of Impact Biomedical could be?
We've got third-party valuations that are very high. That said, realistically, we're about to go out on a roadshow for that. So I'm not sure I'm comfortable commenting on what I think it'd be. I think it could be several $100 million.
And Lisa Thompson wants to know, what product do you think will be Impact's first revenue generator?
So we have a license already with again, without disclosing confidential, non-public information, we have a license out there with a company called Prophase currently for 2 of our products, Linebacker and Equivir, those 2 products in particular. I believe those will be the first to show revenue. But there are several others, and again, it's like horses in a race, right? There's several others that come out of the gate at the same time, and some move ahead faster than others depending on as time evolves. Our alternative sugar, our antibacterial, antimicrobial products, our bioplastic products, I think all have potential revenue opportunity in the next 12 months.
John Figueroa has a question. Where does the funding come from for the companies you incubate? Is it all from DSS fundraising? Do you take on additional investors? And do those investors receive DSS shares or equity in the incubated companies? How does it work?
So the cash comes from DSS is operating budgets, and we've got budgets for each of these businesses that we've put together, and we've looked at our cash on hand and what we believe it's going to take to get these businesses to a point where we can create liquidity through those offerings that we've discussed. if you look at some of the losses of the company, right? Most of the losses that we have are currently losses due to SHRG, the acquisition there, that are really true paper losses and not really operating losses. That said, just as John just asked, and thank you for that question, it's our business model is to buy assets, invest in those assets, build and optimize those businesses, right? That takes capital. And we have to continue to invest our money wisely in the things that we think are going to be the most near-term opportunities.
So adding on to that, Norma Hudson wants to know, what's the structure of your acquisitions? Do you take equity? Do you take a percentage of the sales of profits? Talk a little bit more about that.
Typically, we like to invest in a business and to really take a small equity ownership position initially. So that allows us to get in, look under the hood. It's not a big risk to us. We can see what potential the business has, evaluate management, provide opportunities and conduits potentially for that business with some of our international distribution channels. That's typically how we look at businesses. But as we're evaluating these acquisitions, we're looking at anything that certainly would be potential upside for DSS. Is a piece of revenue something that would be one of those catalysts? Sure. Typically, though, it's an equity stake.
And Jeremy Aguillo asks, when did DSS ultimately go public? And do you know its highest market cap? Plus, how does one claim the shares? Is it automatic?
So let me answer the second question first. The shares you will get automatically if you're a shareholder of DSS. You will receive those through your transfer agent, through the DSS transfer agent into your brokerage house, or if you hold it in street name directly to yourself. That was the second question. And if you could repeat the first part of that again for me, Anna.
Yeah. So when did DSS ultimately go public?
Oh, okay.
And what was its highest market cap?
Something in my tenure at DSS, and I've been at DSS about 14 years. So that said, it went public well before my time, and I believe its initial public offering was around 2003. I couldn't even fathom a guess at what the stock price was at the time.
Okay. So Brian Thornton asked, what industries do you feel you are underweighting in that you would like to increase your share?
From my perspective, I believe that we are underweighting in our securities business. I think we have opportunity in biohealth to bring on assets, both in biopharmaceutical as well as biotechnology. I believe our alternative trading system and the platform that we're providing there are assets that we can bring in there to help bolster that. Our consumer packaging company, I believe that we are, not leveraging that to the best of our ability. And I think there's still huge potential there for growth as well.
Brian also asks the opposite question. Which industries would you like to trim in your portfolio?
We're evaluating our portfolio all the time. As I mentioned, we have come out of the gate with 9 or 10 businesses, 40 subsidiaries, and we've really said, hey, listen, these are more an incubation stage and not ready for prime time. And let's really focus on these 6 or so that I mentioned in this presentation. And that's what we're doing. So, the ones that renewable energy, as an example, we've talked about that in the past. That's one that is, a little bit on the shelf. We're waiting out of that slowly, unless we find an opportunity or the market changes. There's big technology and big capital investments in that business in particular that we said, it's not right for DSS in its current state. Let's focus on the ones that we can get out to our shareholders. Let's focus on the ones that we know are nearest term positive EBITDA and to positive cash flows, and the ones that we can bring to the public market so we can act on this business plan, do what we say what we do, and really set the foundation so that people believe in DSS, believe in the management team, believe in our vision, and will stick with us for the long term as we bring out the next phase, the next 6 companies, if you will, that will be ready for public offerings in the future.
And with those answers, how much does that weigh on your interest for future acquisitions, or do you not focus so much on the industry? Brian asks that question as well.
We've gone very wide and we're in a lot of industries. I don't see, and those are really the road beds that we want to be in. And again, they had the criteria that I mentioned at the very beginning. They have, very high ceilings. They are contemporary in nature. They have recurring revenue models. Do we want to get in industries beyond what we're in now? The answer is, I would say, with a high level of confidence, is no. That said, we want to build out assets in the business lines that we described, the 6 in particular that are near term, as well as the 4 or 5 that are also in incubation phase. We want to build out those companies. We went very wide at the beginning. We're now building out assets to bolster, increase revenue, optimize those businesses, add more value to the business itself so it has a higher potential for a future offering.
Wonderful. And last question, just due to time, from Thomas Willoughby. Do you have any idea how many dividend shares might be projected for either the REIT or the bank?
I don't. I couldn't guess at this point.
No problem. Do you have any closing remarks for us, Jason?
I just want to say thank you to everybody. Thank you for your continued interest in our company. We believe in our business model. I know there is some great success here to be had in both the short term and long term. I know it's taken a very long time in some cases to get some of this stuff completed, but we've got over a lot of hurdles. And I'm very confident that you're going to see some real success here in the near term.
Wonderful. Well, thank you, gentlemen, so much for joining us on the conference today. We enjoyed it, and we'd love to have you back for some updates in the future.
Great. Love to participate. Thank you, Anna. Thank you very much.
All right. Thank you. Be well. Okay, everyone, stay with us. We'll be right back with our next presenter.